I'm excited to have everyone joining us today for a special episode by the Madeline Stout of ProfitPanda CFO, Hiding Your Hidden Profit. So we're really excited to see what she's got to share with us. Before we get into it, though, I've just got a couple things we're going to cover here. As usual, we've got our, want to remind you about JobTread Connect. We've got that coming up in January 17th to the 19th. We'll have Madeline and ProfitPanda will be out there as well. So can't wait for that event. It's going to be a lot of fun, a lot of learning knowledge. Also, if you're not part of our JobTread Pros group yet, definitely get on there. It's our Facebook group. I think we actually just passed 1,900 members in there. So really great community. You can get updates and announcements first thing right there when we publish them. Lots of good discussions and feature requests, things like that. So hop on there if you're not in there yet. And we've also got our builder stories. Got some really great episodes that just came out last couple of weeks. Definitely, if you're not following along, Apple Podcasts, Spotify, YouTube. You can just go directly to builderstories.com. However you like to listen to podcasts. Definitely lots of great insight that you can gain from other businesses, just kind of hearing their story. And if anyone out there, if you guys are interested in sharing your story, we'd love to have you on. You can basically fill out the form on builderstories.com and we'll get you scheduled. And also wanted to announce we've got a really exciting product update. Going to do one of our town hall webinars on Friday at 12 p.m. Central. We've got tons of updates that we've been putting out over the last several weeks. I think our last one was actually at some point in October. So this will be an exciting one as well. Got lots of really cool stuff that we've been working on. So definitely tune into that on Friday at 12 p.m. Central. So without any further ado, I want to hand this off to Madeline. We're very excited to have ProfitPanda is now in the JobTread marketplace. So as you go through this, as you're learning more about them, if you want to reach out, want to get more information, you can do that directly through the JobTread marketplace. And welcome, Madeline.
Hey, thank you so much, Eric. Great to meet you. Excited to be here. I'm excited to talk to your users and everyone in attendance today. And if you're joining in, I know it's the middle of the workday, so appreciate you taking the time. I have zero doubt that you're going to take away something from today's presentation to really help you find that profit that's lurking somewhere in your financial statements or off your financial statements. So we've got a lot to get through today, but let's go ahead and jump in. But before I do so, this is my least favorite part of doing a webinar because it's like most people in here, they've already said they don't know me. And so I want to get into the meat and potatoes, but I want to at least tell you what qualifies me to be here. Just to start off, my name is Madeline Stout. I am the owner of ProfitPanda CFO. We're an accounting firm that focuses on bookkeeping as well as fractional CFO services. But before being a founder, I'm a wife, I'm a mother of 4, and ultimately what we do is try to strip away a lot of the fear surrounding finances at ProfitPanda. There's a lot of fear surrounding audit and job costing and cash flow. And so we exclusively work with the construction and home service industry to really try to peel back a lot of that fear surrounding money. Over the last decade or so, I've worked with hundreds of businesses specific in the construction industry to really help them obtain their financial why. And so we're going to get into that here today on our presentation. So my mission for today is I'd really desire that at the end of this presentation that you walk away understanding that profit is controlled by more than just dollars. It's more than just money. And I'm hoping that you can take at least one thing away at the end of these slides here to try to find at least one or more profit opportunities in your business. So an outline for today, we're going to start by identifying your financial why. And we're also going to define the rules of the game. We're then going to move into discussing the tangibles around how to find hidden profit in like your actual financial statements. And then we're going to strategize on some of the intangibles or some of the soft costs that might be a part of your business operations, but really do impact the profitability of your company. And then we'll close out with some Q&A because I'm sure when we get through the meat and potatoes, there's going to be plenty of questions. So I'm excited to talk to you guys more specifically about your business. So let's first talk about the financial why. Typically, when I meet with business owners, their why is in one of three categories. Typically, their why is they're either a cash builder, they're wanting to accumulate cash, acquisition, or legacy. So I'm going to unpack these three topics, but as I'm talking through them, I want you to really reflect which one are you. And before we move into kind of setting profit goals and targets, as you're thinking about your financial why, start thinking about, are these goals that I'm setting or these profit opportunities moving the needle forward in me accomplishing my financial why? So what a cash building company is it's a company that's built for profit, meaning I want to sustain my lifestyle. I want to make a certain amount of income. And so I want my business to be able to support that. That's going to be, I would say, majority of my business owners who are looking to grow, to scale. They're probably under the age of 40, and they're just kind of in that grind and hustle mode. The second most common type of financial why is acquisition. So that's for my folks out there who are looking to potentially sell, get acquired, or be in some type of financial roll up in the next 3 to 5 years. And then third most common is going to be legacy. So legacy is going to be either I want to pass down my business to a future generation, maybe my son, maybe my daughter, or I just want my company to outlive me. I want my company I can eventually scale out of it, and it's going to be around for 50, 100, 200 years. So kind of start thinking through which one kind of resonates with you. So then that way, when we do define some goals, some KPIs, and some profit targets, that we're really moving the needle towards getting you to this end result here. So let's move into defining the rules. So oftentimes when I talk about profit, people ask me, are we talking about gross profit? Is it net profit? There's so many of these like accounting buzzwords. So I want to define the rules so that way it kind of makes sense and we're in total alignment before we get into the beef of the presentation here. So when I'm talking about profit today, I'm defining it as the true take-home income or your actual cash that you have left over in your business. So it's not net income. Net income is going to be your sales or your revenue minus your cost of goods, your overhead, and that equals your net income. So if you look at your profit and loss statement, which I'm sure everybody on this call has probably seen a P&L once before, it's divvied up into these classes. We've got our sales at the top, our cost of goods sold, our overhead, and the bottom is often called your bottom line. Your taxable income is your net income. That to me isn't profit. We'll talk about a little bit why later, but we're going to move into some other phases here first. So let's talk about cost of goods sold and cost of labor sold. To me, what cost of goods is it's the direct materials, labor, or commissions that you need in order to deliver your service. So if you're a roofing company, your cost of goods is going to be your shingles because you cannot deliver your product or your service to your client without those things. The last thing we're going to define today is going to be our burn rate. Now, if you're going to be attending JobTread Connect in January, I'm going to be doing a whole session on how to calculate your burn rate. It's going to be a little bit workshop style. I'm going to help you actually calculate yours. But what burn rate to me is, it's the rate at which your business consumes its cash. So if you have $100,000 sitting in your company checking account right now, how long do we have if sales were to stop to essentially be able to run our business before we inevitably run out of funds? So as we're going through today's presentation, I want to give you a little bit of a pro tip because I'm going to be referencing some percentages as we go throughout this webinar. So if you log into QuickBooks, I like using QuickBooks Online because it integrates beautifully with JobTread, which is why we love being on their marketplace. When you run your P&L, there's a little category at the top that says compare another period % comparison. And what this allows you to do is it allows you to see the % of what you're spending in each category. So for example, your rent, your marketing, your gas, your materials, it will actually show you how much you're spending in each category. And that's going to help us determine if we're overspending, underspending, and where some potential hidden opportunities lie. So let's go ahead and start jumping into the actual tactical pieces. And these, to me, are some of the most common ways that my contracting clients tend to lose a little bit of money. The first is going to be in materials. So that's going to be, again, your cost of goods sold. Second is going to be in labor. And then the third is going to be in overhead. Now, there's definitely more, but I only have a few minutes with you guys today. So what I want to do is I want to give you my pro tips or some action that you guys can take immediately, implement it into your business in every single one of these categories. So that way, if you're noticing on this report that your percentages are higher than maybe you originally thought, then these are going to be some takeaways that you can do to get those costs under control. So how do we improve our materials? If we're overspending in materials, how do we get a grip on that? I really love doing job costing. This is a big reason why we enjoy partnering with JobTread. And that's because they have really, really good controls around job costing, around budgets versus actuals. And quite honestly, it's probably why a lot of people on this call signed up to work with JobTread in the beginning. So what I like doing is making sure that we have some type of system that tracks our receipts, and making sure that we're putting in POs or what we expect our costs to be on the job within our JobTread system. I like using the budgets within the platform. So that way at the closeout process, then we can review the budgets and actuals with the person who does our estimating or any of our project managers on staff. Also, I like to make sure that my rate sheets are updated. In 2024, I already know of a handful of suppliers and vendors who will be increasing their costs. So this is a good time that we start to link up with our clients and dig into their rate sheets to make sure that their rates actually do tie to the price increases that happen periodically from time to time. I also am a firm believer in auditing the estimating process regularly, especially as you grow and you scale. We want to make sure that, again, our rate sheets are updated, but are we estimating the projects in a uniform manner? So that way our estimating process is consistent. Now, if you're noticing as you go a little bit further down that report and you're looking at your subcontractors or maybe your in-house crew, and if you see that you're starting to maybe spend a little bit more in that category than you originally thought, some ways that we can get a grip on that is going to be, it's going to vary depending on the way that you pay your labor. So a very common question that I get is, Madeline, should I work with subcontractors or should I have an in-house crew? Which is better? And to be completely honest, I've seen it work both ways. But the thing that I ask to them is I go, what does your management and what does operations look like? If we don't really have a really robust project manager, if we don't have someone who's really making sure that we're turning these jobs in a correct amount of time, then I'm going to recommend that we probably go a subcontractor route. The reason why is because we can give them contracts that define a timeline, that define deliverables, and we have a fixed cost. If we go with an in-house crew and we don't have that management in place, typically our folks are hourly and they're incentivized by overtime, not by project completion. And so that's where I tend to see profit really start to slip through the cracks, is just due to time management. So I like having our clients time track for their hourly folks, so that way we can really set clear and defined labor KPIs that we can then manage to make sure that we stay on budget, stay within our profit margin. So whichever way you go, there's certainly controls for either. So don't really have an answer for which is better, but happy to answer some more on that if anyone has questions. And then the last thing is going to be keeping good certificate of insurances up to date for your workers' comp audits. Typically in this labor category, if we're not staying in compliance with our policy, I've actually seen companies go out of business because they'll get these workers' comp audits and these giant surprise bills once a year. And then it really throws off, how much money is being spent in labor, and that gives them some cash flow issues down the line. So stay in compliance, work with your insurance agent, so that way you don't have that surprise in the future. And then our last little tactical piece is going to be improving overhead. Now, what's interesting and unique about overhead is that you can actually improve your overhead percentage with actually relatively no change, but just increasing your volume. So let's unpack that a little bit. So if I'm a brand new business and I'm going to open up and I'm going to have some pretty basic expenses, maybe I have a telephone, some office rent, my utilities, but I just do $100,000 a year in total annual revenue, Let's take that. Like, it's possible that my overhead rate might be 50% because, we have quite a bit of overhead costs in comparison to our total revenue. However, if our revenue stays relatively stable, because as we grow, we don't necessarily need to duplicate multiple offices, multiple telephones, multiple internets, then your overhead percentage actually starts shrinking the more volume that you do. So that's just kind of unique about overhead. So as we kind of go down this slide, I'll explain to how we can, if you're not necessarily hitting your goals in other places, we can manipulate overhead to still reach your desired outcome of the profit that you're wanting to extract from your business. Now, the other thing about overhead is that your profit and loss isn't always giving you the information that you need to know to make decisions about your profitability and how your business is running as a whole. And so what I mean by that is when you're reviewing your profit and loss statement, it's going to show you kind of what we talked about earlier on the first part of this webinar. It's going to show you your sales, your cost of goods sold, your expenses, but what it doesn't show you is a lot of money that's leaving your bank account, but it's not articulated on your P&L. And the reason why is because your profit and loss is really just designed to show you what's business deductible. It's more of it's an important report, but it's designed to file your taxes. But the reality is that if you're a business owner, you're making credit card payments, you're taking distributions, maybe you have several trucks, or you've got an EIDL loan, or you pay sales tax. The list goes on and on and on and on. All of that money is impacting your bank account balance. All of that money is money that's walking out the door, but it's not articulated on your P&L. So I've actually seen companies who are running at this 20% net income or 20% profit, but they're so far in debt and they have no cash, and they just don't understand why. And that's just because we've got to consider more than just the profit and loss statement. And that's what kind of brings me into calculating your burn rate. So what burn rate is it's where we're going to take your profit and loss. We're going to add in some things that the P&L isn't showing, like those credit card payments, like those truck loans, like those distributions. So that way you can really understand how much money does my business consume to run in a given month. Once we have all of those things, accumulated, whether you're looking at your QuickBooks report, whether you're extracting information from JobTread, or you're calculating your burn rate, then we can start to reverse engineer your goals. So an example that I'm putting right here on the screen is if we looked in QuickBooks and we pulled our cost of goods sold percentage, let's say it's at 35%, and we pull our labor percentage, and let's say that's at 30%, and we have a goal that we want to take 20%, right? We want to make 20% because if I'm not making money, then why am I in business, right? Then we know that our overhead, like if we just do simple math, it needs to be around 15%. So if we look at our report and we're actually spending more than 15% in overhead, then that means that we need to start looking at volume. So we need to either be selling more, or we need to address something in another category. So this is kind of how I reverse engineer. It's all very simple math. I'm happy to go over some examples a bit later, but highly recommend finding some of the other pieces using the systems and softwares that you already have to reverse engineer to get you to that desired profit goal. Now, there's some intangible pieces outside of the financial statements that you also need to consider. The first is going to be job turn. How long are we staying on these projects, as well as accounts payable and accounts receivable? So when it comes to job turn, I'm going to give you the example of, it's going to be like kind of an outlandish example, but let's say you go and you estimate a job and it's in margin, meaning you've got the right amount of money for your subcontracted labor, you have the right amount of money for your materials, but you only do one job that month. Chances are you're probably going to be upside down. And the reason why is because that one job can't sustain your whole company's overhead for the month. Now, if we take the same scenario and we did the same thing with our job costing, so our materials are in line and our labor is in line, but we did 50 jobs that month, then we're probably going to be turning a profit depending on your company, just because we're divvying up that overhead over multiple projects. So having clear project management and understanding how many jobs do I need to be doing in a given month in order to hit that profit margin target. And also we want to make sure that we're defining targets or stages of completion, and managing this using our systems and processes. So whether you use JobTread, whether you track this on a spreadsheet or on a calendar, we just want to really keep job turn in mind, because the longer that you're on a job, the less profitable it becomes. And if we continue those patterns, project over project over project, then eventually it's going to result in some cash flow issues. So the last thing here is going to be improving accounts payable and accounts receivable. So what does it matter if our profit margins are good and healthy if we can't collect the money? So when it comes to accounts receivable, we want to have really defined, and have a followed collections process. So if you're a company that does pay apps, we want to make sure that we're submitting them timely and accurately. If we're doing progress billing, that we're actually collecting the money as we complete certain stages during the project. And if we've got AR, we want to make sure we've got a collections process in place, because typically when your invoices are sitting out 30 plus days, they get harder and harder to collect the longer that they're sitting out there. When it comes to accounts payable, which is the money that you owe other people, we want to start planning for your accounts payable now. I call this the cash flow rat race. And typically there's no shame around this, but I would say 90% of the clients that come to us, they go, Madeline, I'm constantly selling new projects to pay my old supplier invoices because I've just been trying to buy some time. So, I start the project, 30 days later, I close it out, or however long later I close it out. And then my supplier invoice is due and I pay it with a credit card to buy me a little bit more time, but I'm constantly trying to sell new work to take care of this old AP. So there's things that you can implement to hold back that cash now. And you do get that first payment to put a little bit aside for materials. So that way you're not constantly playing that catch-up game. If anyone is familiar with the Profit First system, I like to modify that a little bit to try and hold back some of our materials or our payroll or expenses that are due in the future. So that way that money just doesn't vanish and disappear as it always does. So there's a couple of just demonstrations I wanted to do here as we reflect on all the slides that we've gone through so far. Typically, it's pretty easy to find 1 or 2% that you can improve on. And I wanted to quantify that to you so you can see that if you just make minor course corrections, it's going to result in tens upon tens of thousands of dollars. So if we're able to look at our materials and update our rate sheet, or if we're able to fine tune our job turn, we're able to complete more projects in a given month, or if we can start to really manage our labor, then squeezing that 2, 5, 7% out of the company isn't really very difficult. On average, the clients that we work with were able to result after, I would say most of our clients, 9 to 12 months, an average of 14.82% increase since from the beginning of the engagement to current. And these numbers are accurate as of 10/31, so not last month, but the month before. And if you're a $1 million company, that is a cash or a take-home money of over $266,000. So it's very significant, just these little minor changes. If you can't quite get to 14%, because that's a lofty number, even 5%, that's 50 grand for every 1 million in total revenue. So really want to encourage you in going through some of these steps. I'm happy to share these slides with you or to kind of answer some questions here in this Q&A portion. If you feel like any of these resonate with you, do you feel like it's difficult to get a grip on labor, or do you feel like it's difficult to get a grip on some of the estimating or job costing or all of that? So would love to hear from you guys, answer some questions, and I really appreciate you guys listening to what I have to say so far.
Thanks, Madeline. Yeah, that was great. So yeah, what questions does everyone have here? And just kind of while people may be thinking of them, wanted to just also note that, we've got several customers who have been working with Madeline and her team at ProfitPanda for several years now. I know some of our first customers, Luan and Nate Burkett, and there's a good group of them that have been working with you. They told us about you, been very complimentary of your services and how you've really helped them to get their books organized. So I really appreciate what you're doing for our existing customers, and I think it could be a good opportunity we see people all the time asking for help with this. And, there's a lot more demand than I think supply for good bookkeepers and, people to help from the accounting standpoint. So, really.
Yeah, I think what's unique about maybe some of those clients or those relationships, and this is just a compliment to them as well, is that when you have a really defined goal or a defined why, or this is the money that I want to make, it can be as simple as that. And they're involved in business coaching and personal development. When they're able to give us that information, at that point, we really can utilize that to reverse engineer what needs to happen on the tactics of costing and margins and tax planning and all of that. So love working with people who really do the work and, are clear on what it is that they're looking for.
Yeah. I mean, what would you say you think kind of the most common pitfalls that, that you've seen with contractors, struggles that, you think that your team has really been great at helping them with?
Yeah, so I would say like the pitfalls, it's kind of, this one it's semi not related to finance, but workers' comp. So workers' comp typically, and I see some questions come in here, so I'll answer those once I answer this. But with workers' comp audits, what happens is we're estimating the premium that we think that we should be paying. And then you get audited at the end of the year, and then typically you have to do a true up, which some companies are prepared for, and some of them have no idea, and it's just a huge burden on them.
Yeah.
And so what I would say is there are ways to avoid that. You can actually completely avoid an audit if you're wanting to. But that I've seen really tank businesses. And then also referencing that cash flow rat race of I'm constantly selling new work to go and pay off these old suppliers. And at that point, it really doesn't feel like you own a business, but instead the business owns you. So it looks like a couple of questions. I'm going to kind of go top to bottom. The first question is, how fast should we pay our subs once we receive their invoice? I always pay in less than a week. So thanks so much for your question, Brian. What I would say is I like to set the expectation of having some type of accounts payable process. The reason why is because when you're small, or not small, but if you're at your current size, then you might be able to cash flow that now. But as you grow and you scale and there's multiple subs, you might need a little bit more time. So I like to set the expectation with at least my subcontractors of putting them on a similar payroll schedule as my internal team. So maybe you pay bills on the 1st and 15th, maybe it's every single Friday, but I wouldn't just be at the beck and call of your subs if you can avoid it. So that way you have time to kind of accumulate cash, focus on collections, get some of that AR without always having to race checks out to them. Shay, I believe, is that how I pronounce your name? Can you provide an example of calculating burn rate? Yeah, so I can go over some very quick highlights, but I really encourage you, if you can attend JobTread Connect, this is what I plan on doing for that whole session. I'm going to actually be bringing some collateral to you guys so you can work through this exercise with me. But essentially, what I like to do, it can be as simple, like you actually don't even need a bookkeeper to do this. You can literally go into your bank, get all of your bank statements, your credit card statements. If you have QuickBooks, great. But write down all of the expenses that you have on a given month. Write down any credit card payments that you're currently making. If you take distributions regularly out of your business, include that. So basically write down everything on a spreadsheet. And ultimately, it's kind of like a budget. How much money does my company need to make to keep the lights on? What's different about, and that seems semi-self-explanatory, but unfortunately, those values aren't represented on your P&L. So oftentimes you look at your financials and you go like, wait, it says that I'm profitable, it says I have all this money, but when I look at my bank account balance, it's just not there. And it's because if you pay $100,000 on your Amex, that's going to significantly impact your bank account balance. So your burn rate, it's kind of like a P&L. We call it a modified P&L, but we're going to take your income statement and add in everything that isn't recognized. So the report that I'd recommend that you pull would also be your balance sheet, and you can kind of dig into some of the accounts in there. What are the KPIs I have to look for that my business finances are running well? So some KPIs that I like to look at once I've established my burn rate is when I have that dollar amount for my burn rate, I want to make sure that I'm collecting in excess of that burn rate. Because if I'm not, then I know I'm going to have some cash flow issues, right? So some of the KPIs that we track for our clients definitely are related to weekly collections. Also, I think that your finances are a lagging metric of closed sales. So making sure that you're staying on top of your lead metrics, your closing rates, how quickly you're getting on these jobs. And then from a very like financial, if you just want like a financial answer, looking at a cash flow statement or looking at your net income. I mean, ultimately, we want to make sure that we're running a profitable company. So those are a few good ones. Are there ways to slow down your burn rate? Yeah, absolutely there are. You can, once you compile that list of how much your company is burning, you can certainly cut overhead if you're overspending. I'm trying to think of other ways that you can cut it. Sometimes, like if you trying to think, that's actually a really good question. I would say cutting overhead is probably going to be the quickest way that you can slow down your burn rate. Just how much cash is going out of the business. How many bank accounts do I need to have for my business? Okay, so I'm assuming that this is semi-related to Profit First. I have a love-hate relationship with Profit First. So what I would say is it depends on how much cash you have. So Profit First, I like the concept of this because it's saying, hey, let's put a portion of our total money into a materials bucket so we can start getting ahead of that accounts payable. Or, hey, let's go ahead and save some money back for taxes that we know we're probably going to have to pay next year. But actually what happens, depending on how much cash you keep on hand, if you split up your money into too many accounts, you're actually going to be a risk to lenders in the future. So if you're wanting to get a line of credit, a loan, SBA, they like to see your average banking balance like a little bit just consistent. They don't want you to be running your accounts down so low, just divvying it up into multiple accounts. So a good rule of thumb would be if you look at your total revenue, keep 25% of that balance in your main checking account at all times. If you're able to sustain that balance, then absolutely let's start splitting up money into other categories to kind of help you budget for AP and taxes and distributions and all of that. Do I recommend a specific burn rate? So burn rate isn't necessarily like a percentage. Like I recommend that you burn less than 10%. Burn rate is how much money does it take you to run your business? And then we need to reverse engineer the company in order to support that. So it's more so we start with the burn rate and then we build the company around it to support it rather than the other way around. I hope that makes sense.
It's awesome. Very helpful. I was curious too. I mean, who's your ideal customer? You know, what's your customer profile that, you know, you feel like is a great fit for you and your team? You know, maybe revenue wise, employee wise, just industry wise, you know, what do you guys find is the best client?
Yeah, that's such a good question. I would say so construction and home service are the only industries that we currently serve. But throughout, you know, evolving in business, I've learned that my ideal customer isn't someone that just has a pulse in a checkbook. I really want people to be invested. You might be able to see that I'm passionate about what it is that I do. I want the people that come to the table to be equally passionate about their businesses. Now, it doesn't mean that you get all jazzed up for accounting because not everybody is as weird as I am. But what I want is I want people who want more than what they have right now. So to me, that doesn't always have to be monetary, but I want people who are looking to grow, who are looking to scale, who are looking to do better, who are looking to serve in their communities, who are looking to provide new opportunities for their internal staff. So on our intake form, when people, you know, go through our process on our website, one of the questions that we have on there is, are you involved in some type of personal development? Whether that's coaching, personal training, a Bible study, I don't really care what it is, but I want people to have that growth mindset because we bring a lot to the table. And when we work with our clients, it's not like we do your books and you get reports at the end of the month. We talk to you twice a week. And so you're getting real live information. And so it's a two-way street. We're going to be compiling a lot and bringing a lot to the table for you. We're also want to hear from you. What are your goals? What are things that you're struggling with? So then that way we can adjust and kind of course correct to help support you.
Yeah, makes total sense. Curious, what is your favorite JobTread QuickBooks Online integration feature?
Oh my gosh. I would say, well, first of all, like what I've noticed with a lot of other, and I'm not going to say names, is whenever I route products and services, oftentimes if you use the same product and service, it'll come through duplicate. And you guys have that really seamless. And so I would just say from the ease of use, whenever I pull reports out of JobTread, once I do the initial integration into QuickBooks, the reports reconcile much more easily, and it's very rare that I have some element of discrepancy. So I would just say, purely from a data validation perspective, I feel very confident in knowing that the reports that we're reviewing on the accounting side are very similar to what our clients are reviewing. And that's a big deal because typically our clients, project managers and estimators and internal team, they're not getting into the accounting system. And if there's massive variances, it's hard to get everybody on the same page. I also like that you guys play nice with projects in QuickBooks. That's very unique to the JobTread platform, but then budgets. I mean, I'm not sure if Terry's on this call. Terry's on my team. She'll be coming to JobTread Connect, but she works really closely with our clients on the budgeting features. And I swear every single week she's coming to our internal client calls. She's like, did you know that if you do this, like, so ProfitPanda is a big fan.
Awesome. I'm curious if you have a recommended, book or something that, you like. Hey, how's it going, Terry?
Recommended book?
Yeah.
Just in general?
Just in general.
Oh, yeah, I do. So it's called A Minute to Think. It's by Juliet Funt. And I think every entrepreneur could really benefit from reading this book because typically, if you're a business owner, you keep a calendar. And whenever you have that open space in your calendar, you're like, oh my gosh, I'm not being productive. I need to fill it with something. And what I notice is that really takes away from my creativity and building and innovating new things in the business. And so ultimately what I've been doing is booking what's called white space time. And I put a calendar block for it so that way it doesn't get filled up with other meetings and stuff. But it's really a time to think of better ways that we can serve our clients. How can we be creative with new reporting? How can we utilize, our clients' project management systems to deliver them more accurate results? So big fan of that book. Every entrepreneur should read it that's feeling burnt out.
Awesome. I'm curious.
What about you?
Well, I would say my most recent favorite book would be Marcus Sheridan's They Ask You Answer. Just all about, being very transparent. All of the questions that, your customers, your prospect, anyone might be asking, he's just all about, look, create a video, create a blog, just answer those questions up front. Don't hide behind them. Don't try to have, play games, dodging questions. It's like, just here it is. And, that's served us really well with, just ever since I heard him speak, read his book, and, we pretty much just have like opened up like all of our webinars, all of our, events. It used to be customer only. Now we're just like, look, let's just put it out there and help people, learn and, be able to be part of the community. So
yeah,
that's my new recommended go-to for sure.
I love it. For anyone who's still kind of listening in, if you don't mind, could you put in the comments maybe a fear that you maybe have had or currently have surrounding accounting, taxes, finances, cash flow? I would love to hear about maybe something that you feel like might be holding you back from hitting your financial goals, or just something that you're nervous about as a business owner, maybe you'd like more clarity around.
Yeah, that's great. I'd also be curious to know who all's currently working with, someone to help them with their books and their accounting, or, if they're doing it on their own, kind of how are you doing it today? And, what does that look like for you?
Yeah, that's a great question. Typically the fears that I'll get right off the bat is everyone goes, I don't want to go to jail, right? Like, I don't want to get audited. I don't want to get in trouble. That's my biggest fear. And sometimes folks are nervous to take advantage of some of the tax law or some of the tax loopholes out there. Of course, I want to make sure I'm legal, ethical. We follow all of the guidelines. But I think what I would want to encourage people to know is that the IRS really does create their laws and their guidelines to influence us as taxpayers. So it's not really something to be afraid of. So if you think about like what happened during COVID, when we had EIDL and PPP and all of these tax programs come out, a lot of people were really nervous and hesitant to take advantage of them because they were unsure, and it's too good to be true. And I don't understand why this money is coming out. But in reality, what they were doing is they were trying to give you funding to retain your employees, right? So they were influencing your behavior through tax code, or through tax law or tax opportunities. And so that's something that we like working with our clients on is, hey, based off of our current financial story, what are some things that we could take advantage of that the IRS is influencing us to do anyways, but maybe that could leave more money or more profit on the table for us to take home?
Yeah, it's a great one. See, Dwayne here. Past fear was the WHIP reports, only because I struggled with percentage of completion when it was based on work completed, not invoiced. We now have it as invoiced.
Yeah, WHIP reports are a big one. I could definitely understand. And also for a lot of like our custom home builders, you might be taking deposits for projects that are starting now, and it's December 5th. If we're retaining all of that money now, and we're not showing any expenses for it yet, because maybe this project isn't starting in February or March of next year, is it fair that we get hit with just a massive tax burden in 2023 when all those expenses are going to happen in 2024? So thank you so much for sharing. Definitely, that makes sense that you kind of made a switch. That way you can get more accurate financials and WHIP reports.
Yeah. Yeah, that was one of our newer features, I guess, in October. We rolled that out, and it was a huge hit, and just really helps, again, people kind of better manage and sort of flatten out their curve there.
Yeah,
Okay.
absolutely. Huge feature.
Do you see a lot of times, or at least kind of what we see a lot of times is, companies that, again, you might have, family owned, just someone kind of entrepreneurial has, spouse or, family member, someone kind of helping with, their books who, may not fully, be qualified. Do you see kind of a lot of businesses coming in where you can kind of help, either train that person or sort of transition it to, to you all to help them kind of, maintain their books a little bit more professionally?
Yeah, for sure. I think oftentimes, there's oftentimes bookkeeping, it can kind of be written off as, oh, well, McDonald's is meals and Chevron is gas. But just what I want to do is I want to build the books to be very intentional about hitting that financial why. So when I look at doing our books, whether it's for my company or whether it's for other companies, I'm going to give guidance throughout the year. Like, hey, maybe it is time to go ahead and buy that truck now. Or I'm noticing that when I'm running this, this percentage report that I referenced early on the slides, that this quarter versus last quarter, we're starting to lose track of our labor margins a little bit. So let's go and have the team time track for a couple of weeks so we can kind of see what's going on there. Maybe we just hired a new employee and they're not performing at the same rate as some of our others. And so we kind of need to figure out and dial so that we can give certain employees more support. So bookkeeping to me is really the foundation for everything else to build upon. For some of our CFO services, as we get into forecasting and cash flow reports and all sorts of things on the CFO side, the basis and the root of that information comes down to really good, accurate bookkeeping. And so if there's someone in office that might need assistance with that, would love to support the company in kind of refining those numbers, especially if you're someone like Dwayne who has WHIP reports. Holy cats, if we're not articulating those correctly on the financials, your financials are going to look up, down, up, down, up, down, up, down. And so that's just going to take that additional layer of maybe accounting support to get you some numbers that, make a little bit more sense.
Awesome. All right. Well, I want to, thank you again for taking the time to share this. We look forward to having you and your team out at JobTread Connect. Lots more presentations will come out there. Again, everyone who, if you want to learn more, get connected with Madeline, please go to the JobTread Marketplace. They're now live on there, and you can, learn more, obviously, link off to their website and check it out there. But if you reach out to them, they will, be able to, I guess, kind of what's your process, Madeline? Do you like to schedule a call, have a, little intro? How do you kind of manage, client request?
Yeah, no, that's a great question. So if you go to our website, ProfitPandaCFO.com, what we do at no charge is we'll do a consulting call. I'm just going to learn a little bit more about your business. And then I'm actually going to jump into your QuickBooks file with you, and I'm going to give you a game plan. So, hey, this is what I see so far. Here's your profit opportunities, and I'm going to give you a number. Hey, if we make X, Y, and Z changes, I see that maybe we're sitting on $50,000 that you could take advantage of. So before you even come to work with us, I want to make sure that there's synergy and that you see value in it is what we do. And we want to give you a game plan with cemented dates. So that way we can track, our progress and make sure that it's a profitable venture for all parties.
Awesome. Well, thank you again. We appreciate your time and look forward to meeting you in person face-to-face at JobTread Connect in January.
Yes, thanks so much. Thanks everybody for attending. We'll see you soon.
See ya.